And is it fair to say then that you're almost trying to build a mini Rio Tinto or Anglo-American?
It's quite funny because I did actually look at the Rio Tinto site the other day. I did it for marketing purposes, because it's always good to look at other companies and how they promote themselves. And we noticed that the Rio Tinto, if you look at the countries of operation, have quite a few different countries listed down. Then you can click on the country and you can see what projects are behind those countries. And I thought, blimey, this does look actually quite like our business in terms of multiple countries of operation. In some countries we have one project, and in some countries we have more. And they are taking a portfolio approach. And I suppose the generic investor view is, well, they're entitled to take a portfolio approach because they're a very large company and that's exactly what they need to do. And I would say, but why are we not entitled to take a portfolio approach too? Why are we not entitled to think big? And why am I not entitled to think I can build my company into a £1 billion company with, fundamental business principles well in place, good management, good communications, good finance, a good, strong, diverse portfolio that is chock full of district scale potential interests. I do genuinely think it's the best portfolio I've ever seen. Gritty determination of the team involved. Everyone in our business works like I've never seen anyone work before. They're all the same. We don't have much downtime. We just keep going because we're on this relentless drive. So if I want to dream big, then I'm entitled to do it. And I'm not doing it vacuously because I've got the largest shareholding declared in the business at the moment. Right, so I'm doing it on the basis of being a shareholder. I've sunk getting on for, well, I will be soon, over £500,000 invested in the business of cash, there's every reason for me to want my business to do very well. The only downside I have is I'm a director. So if you're a shareholder, my share price goes up 20 times. You can sell the stock any time along the way. As a director in the company, I'm not as flexible, so I have to create fundamental underlying value that sticks with this business, rides through the cycles, and ultimately at the end of the process has mechanisms to distribute that value to its underlying shareholders in a way that I can benefit from as a shareholder as well as a director.
Mm-hmm. And in your mind then, what is your timeline for success?
I behave just as a private investor, in the sense that I want the returns. I've been in this market for 12 years, and this current phase, we're now August 2021, and this phase of pullback I'm perfectly used to. I'm not panicking. I'm not worried about it. I'm frustrated because it's like having a job. In my business, I have a job appraisal every day, sometimes 25 times a day. And when the market's on a pullback, I could work for 12 hours and do some great work and think this is really good for the business, for the shareholders, and then people say, nah, it's rubbish. Share price is down 7%. I go on social media, I look at the recommendations for how we should improve the business and what we're doing wrong. I see comments like, we're a scattergun approach. Well, scattergun is a phrase you use because you don't understand the fundamental way the business is being built, which is portfolio, risk management, diversification, building financial strength, building company strength, and then ultimately focusing down on those major areas of success as they come along in the business. But you read things like this and you think, okay, you see that, we should do this, we should do that. And we're in that phase at the moment where people's frustrations are coming out. People are worried and concerned. But I've done this for so long now. I just head down, keep going, keep focusing. Do I think our business is worth 2p a share at the minute? Well, yes, because the market has decided that. Could this business be 22p in 6 months' time? Yeah. I look at what we've got within this company and what could happen in the next 6 months, and I think, yeah. Am I going to use that as a ramp to get everyone excited so I can go and surreptitiously go to one of those lovely brokers in the city and raise a quick bit of money? And, no, that's not my philosophy. Bear in mind, in our business, the last time we did a raise was July 2020. You know, if I was a normal raised monkey in the markets, we'd have done 3 by now. Now, if I had to go to the market and raise money, would I do so? Yeah, of course I would. Could I do so? Yes, of course I could. Get offers all the time. You know, how would I do it? Protective of the existing shareholders. Why? Because I'm the largest shareholder. It's not rocket science, you know. But I think now, in this time of frustration, if I have one lesson for my personal private investment career, and back in 2009, I started with like a few £1,000 in the junior resource space. It might have been close, you know, £7,000-8,000, and I had nothing else to invest. I wasn't doing too well financially or personally, in fairness. But now, 2021, so 12 years later, you can work out what my position is in Power. In Power, I hold 64 million shares, and I have about 30 odd million warrants from previous financings. I've participated in all my financings in the company, and I have 40 odd million options. So circa 140 million financial instruments, I call them. Shares, options and warrants. At this moment in time, that's worth around £2 million if you count the share value and the profit margin on the warrants and the profit margin on the options. It's a big position. You know, I'm not overly worried about it being a big position because I actually think it's quite a small position in terms of the business, and it should be worth a lot more. But I've done reasonably well over 12 years to build to this position. I have other investments as well, but one, you know, my kind of biggest is POW, to be honest, and that's with good reason, because I think it's going to be the best performer out of all my portfolio. But right now, based on all my years of experience, I think in these down phases, the biggest thing the investor does is back away from the sector because they think it's never going to come back to life, and it will. The thing that investors should do is look at the portfolios and see which of these companies do I have the most confidence they will rise and drive higher when the sector comes back to life, and then reposition your money. Get out of that stuff where everyone's gone quiet, where the directors have been hiding under rocks. Right, just get out there. If you believe in your story, you keep marketing through the down phases. You know, as we've done at POW. We put announcements out about our business all the time. We don't stop our activity levels because it's a bit of a down phase in the market. We don't go, oh, no one's listening, so we won't say anything. No. We keep pushing out because the stuff we do now is getting noted by people. Investors are not stupid. They read the stories. They might not have the confidence to buy the shares, fair enough. They might not have the money to buy the shares, but they are watching. You get your message out and you're ticking those boxes in investors' minds. And when the sector kicks into life, to use a corny phrase, you know, when the tide comes in, all boats rise. You just want to be sat on the speedboats, not the small dinghies. You know, I want this business to be a speedboat so that when the tide rises, we shoot ahead, way ahead of the others, and we grow far faster than your boring, mundane business can be. And I think investors, if they can do themselves a favour, stay in the sector and buy into those shares or put the money in those shares that are going to be the real performers.
Okay, that's good advice.